15-minute time frame, one specific pair, and a specific time of the day. In this video, I'll give you a full plan to trade the New York Judas Swing. I already talked about it a long time ago, but we are taking another approach this time. If you are someone who doesn't trade the New York Kill Zone, then make sure to watch the video of the London Judas Swing, which is my personal strategy. If anyone needs a one-on-one mentorship, check out the description. This is Mulham, and let's get into it. So what I want to see when it comes to the New York Judas Swing, I want to see price, for example, going up, right? So I want the bias to be bullish in this scenario, and I want price to go up like this. And at 9:30, I want to see a liquidity sweep. So let's say 9:30 is here, and I'm gonna mark it later. So 9:30 is right here. I want to see the fake move. So what is a Judas Swing? It's the fake move that is against the bias. So let's say if we're going up, I want to see a fake move before the right move. And the fake move goes to the downside, takes a liquidity level, and then continue on the right side. So we are going up. What I want to see here at 9:30 for price to come here, for example, at this liquidity level, and then started to go up. So we had the sweep here. And how do I know that this is my Judas Swing right here? How do I know that? It's simply the displacement after. So there should be a liquidity sweep. That's the first thing. And we see it right here. There was a liquidity sweep here too, but we see that there was no displacement. But after taking this one, we see displacement going up, and we have the market structure shift right here. Displacement and market structure shift. And also I want to see a fair value gap on the displacement leg right here. I want to see a fair value gap here. When I see all of those things, and let's say we have the market structure shift right here, on the 15 minutes, we have the fair value gap right here. I'm going to be entering on the fair value gap, and my stop loss is going to be below the low. That's with this low. And I'll be targeting either 2.5 to 1 or 3 to 1. Or if you want to, you could have that dynamic take profit. So, at the low hanging fruit or at the opposing liquidity level, whatever you want. But this is the main structure right here. This is what we want to see. We want to see prices going up. And before 9:30, I want to see that fake move. When I see that, and how do I know it's a fake move? Literally, we'll see it very clear that price basically, going in any, like let's say it's ranging, and then at 9:30, price simply goes up here and then comes lower immediately. Then that's the Judas Swing. You see it right here. And it's going to be so clear on the examples. It's a very simple. We're going to be entering at or after 9:30, and it's a personal preference after that. You want to enter before 11, before 12, or even if you want to take an entry after the PM session, you can also do that. We enter, we see the take profit, and that's it. This has the potential to, be happening every day, but it doesn't happen every day. It's the same as the silver bullet. There is a potential of it happening every day, but it doesn't happen every day. So I really want you to forget about that mentality that, oh, it should happen today. No, there is a potential, or there is a possibility that is going to happen today, but there is no guarantee of 100% that is going to happen today. Everything is going to be much more clear when looking at the examples. This is the overall idea, but we have a lot of specifications we're going to go over when it comes to the examples. I'm going to start with the good examples first, and then I'm going to show you the bad examples that you don't want to take. So we covered both sides. Today's video is sponsored by Hanko Trade, one of the best brokers in the business with spread as low as 0, low commission, and you can trade all markets, including Forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. So looking at this example, what do we have right here? So basically, first of all, price is going lower right here. So on the 15 minutes, we can clearly see that price has been going lower. Right now it's been going up here, but then started to go lower, and there was, now looking at this, it's 9 a.m. right here. What are some levels of liquidity that we can see right here? We have this level of liquidity, and also this one, and this one actually has a fair value gap above it. So there is a nice fair value gap just above it right here. So actually this could be a good trade if price sweeps the high at 9:30 inside of the fair value gap. This is going to be the fake move, and then we can go for or look for a trade on the lower side. So you can see that 9:30 is right here. So this is the 9:30 candle. Price actually goes inside of the fair value gap, sweeping the high. Now let's wait for a displacement below this point and this point, mainly this point. So there is a nice displacement, price going, and that's a very nice displacement actually. You see, very nice displacement, and we can see that thing that we talked about. The structure, basically price coming lower, going lower, going lower, and at 9:30, what happened is that price simply goes up, taking out people thinking that, oh, there is a change of character right here, and then it continues to the downside. Where do you take trade from? Here, fair value gap here. Continue to the downside. This is basically what we are looking for. Now, why using the 15 minutes when we used to use the 1 minute? You could have used the 1 minute or the 5 minutes here, but I just realized that the 15 minute is more chilling. You lose less trades because sometimes if you trade the 1 minute and the market is not that clean, when you go to the 15 minutes, you would see that it's not clean. But on the 1 minute, a lot of fake outs, a lot of trading opportunities that ends up losing. So I don't feel it's worth it here. So we can clearly see that this is a Judas swing right here. Where is the fair value gap that we're having? This fair value gap, and there is a small balance price range right here, very small one. So that's going to be a good entry. I mean, the 50% of this fair value gap with a stop loss just about this high, not this one because it's kind of too far. And I'll target this low right here is the low hanging fruit, and it's 3.3. So I'll take that one. See what happened. Now there is kind of a retracement. If just to make sure that we pull our OTE and see what happens. You can see that 62 is right here. So this is about 50%, which is a good thing. Not on the OTE that much. The OTE is at the PPR, at the balance price range, just right here, the 62. But, we're going to keep going. We're going to enter anyway. Price comes to the 50%, to the entry, and to the 62, actually. It comes to the 62. And starting to go lower. It took some time here. So we're already in 2.5. If you were good with 2.5, then take the profit. If not, you could have hold and, price goes there. Right there. Take profit on the next day. And that's a very nice trade, very clean, no drawdown, nothing. Now, if I see here, this is the 9:30 timing. What happens here is this. Price opens here, goes up, goes up, goes up. The order flow was bearish, right? The order flow was bearish. And we can see that at this point, what happens is price taking this liquidity level inside of a fair value gap right here. And price immediately started to go lower with the displacement. So by taking a look at this, we can see that this was our Judas swing right here. This is our Judas swing. Price after that started to go lower. So there's a fair value gap here. There's a fair value gap here, a very small one, and another fair value gap here. So, you could have taken an entry from here, but what time is it? It's already 2 p.m. So if you're trading the silver bullet timing or the PM session, you can actually enter this one. Otherwise, and you see, it works very nice. Very nice, and it goes lower. So if you like to trade the PM session, this can also work. You can also hold the trade for the next day if you want to. Or you could have taken your profit at 2.5 just right here. But this is the same thing here. We're going to enter from here. Fair value gap, stop loss just above the high. And you could have targeted 2.5, the same thing. Or if you wanted to, you could have extended to 3R. Or the low hanging fruit, if you look to the left, there is nothing as of now. But price can actually go lower. And that's a 3-to-1. Very nice thing. The same way. We have the sweep. And we had the breaker structure or the change of character at this point. And then we have the fair value gap, Going over another example right here. And it's kind of different when it comes to the bias. So price is going up, right? But before I cover this, let's see this one. The day before, what happened here is this. Price was going low, created this low, went up, no displacement. And then almost at 11 a.m., price comes lower, create this Judas swing right here. So this was the Judas swing for this day. It was kind of late. Usually I would like to see it at 9:30 or 10 a.m. So price created the Judas swing here, goes up, fair value gap with a small displacement, but it's still inside of this leg. So for this one, I'm not going to take it. Only people who use the lower time frame can enter this one. But for me, even though it worked, but I'm not really going to take it. Why? Because we have this fair value gap and price can simply react from this fair value gap anytime. It can be rejected. So I'm not going to cover this one. But let's see here. What was happening is price coming lower, then it created a Judas swing here to reverse up. So price was going up, and this is 9 a.m. We're going to play one more. We can see that price started to go up. And at 9:30, we can see that price went all the way right here. So it's going up. Now, what we are going to expect is price to come lower here, Judas swing here to go up. Or if we are at a higher time frame PD array, what's going to happen is price actually just reacting from here. This is going to be the Judas swing coming lower with displacement going lower. And switching to the daily time frame here, what do we have? A fair value gap, a bearish fair value gap. So price can actually react from here anytime and just go lower, right? So switching back to the 15 minutes, which is our time frame, we can see that price is literally at the top of the daily fair value gap. And also there is a 4-hour fair value gap just slightly above here. Now, price might be going into the order block and then coming lower, but we don't know yet. We're going to wait for the Judas swing to be created. And how is it created? Liquidity sweep and displacement. So when we see displacement at 9:30, we're going to see where the Judas swing is. And we can see that it's starting to be clear here, right? So price coming here. This is the fake move now going lower. It's still not confirmed until there is a market structure shift below this point. And we can simply see that price closes below this level. So that's our Judas swing. And all of this move to the upside, it's ending now and price is reversing. We have this fair value gap, very small fair value gap right here. If we actually look at it, very small fair value gap. When you have this type of small fair value gap, we consider this high of the candle as a liquidity sweep. So price can come here, take the liquidity into the fair value gap and come lower. See what's going to happen here. We also have another fair value gap right here. So you can enter from this one or this one. But I'll be entering from the first one, this one, right here. Stop loss above the high, just like this. And let's say we're going to target, let's do 3 to 1. 3 to 1. Just like this. Or you can target actually this fair value gap with a breaker block or mitigation block, whatever this, for 2.5. But there's a lot of low resistance liquidity here, right? We have almost those relative equal lows. So we can extend them more actually. So we can go 3 to 1. And we can see that we get filled here. This is 12:30. And price after that just keeps going lower immediately. Like you see, there is no drawdown. The only fair value gap we have, price literally coming lower. Now, sometime you want to confirm this. You got to go to the lower time frame, see if there is a breaker block aligning with your higher time frame fair value gap. That's also going to be another confluence. But we can clearly see that price literally touched the fair value gap, went lower. And that's the Judas swing entry. And this is another example that we can cover here and learn from it. Actually, I'm not going to go over a lot of examples for this setup because it's so easy to understand. It's just that you got to practice it, and get used to it, get comfortable with it to get that high win rate. Everything needs to be practiced, right? So practice this, see how it goes. But it's very easy to understand. And I'm going to cover this example and then go over some bad examples that we can avoid and why to avoid those examples, okay? Now, this is 9 a.m. I'm going to play one more. See that price actually going up. And I can see that there is this level of liquidity on the 15 minutes. And it's not taken. On the downside, we have this level of liquidity, this one, and this one, all of those levels right here. But we have a lot of low resistance liquidity here. A lot of liquidity. So if we get a sweep here and we get an entry, then we're going to target all of this. Looks like price went up, took this liquidity level, and it's 9:30 exactly. So 9:30, we have the liquidity sweep. All of what I'm waiting for is displacement to the downside below this point, and I can confirm that this is my Judas swing right here. So let's see what's going to happen. The price starting to go down, going down, and this is a good displacement. No closure yet, and this is the closure below. Closure below, and also a fair value gap right here. So we can actually enter from this fair value gap right here. Fair value gap here, 50% of the fair value gap somewhere in here. Stop loss above this high. Or you can cover this high, but whatever, you know. And what we can target right here is this low. This is 2.3. But we can also extend it to the low hanging fruit right here. This is the obvious one, and this is the, and it looks like this is the low of the session, of the previous session. So what we can do is this, enter from here and see how it goes. So price started to go lower, and we give the entry right here. So we give the entry right here, and price started to go lower. And I want to see what the reaction or the rejection right here on this level is taken. So price still went up. So we had at this point it was 221, and then started to go lower and took the low immediately right here, and also this low. And there is another low right here. And this one, most likely price will come all the way here. Why? Because we have a low and a fair value gap. So this is a winning trade. And you see price went all the way there below this point into the fair value gap and the order block right here. There is an order block right here, and price started to go up from here. So this was a winning trade, and it's a very nice trade, very clean trade. It's just that you need to practice this. Know when to enter, when not to enter. But for this setup specifically, you really need to focus on displacement. Now, when do I take a trade and when I don't? You see the difference between this 930, this one, and this one? This is literally has been ranging. So since 930, it's been ranging, no fair value gaps, no displacement. And right here, it started to go up. But you cannot know where the exact sweep is. I mean, you know, but it's kind of hard and you'll be confused. So what you really need to focus on is the displacement. You see how the displacement right here is very clear. What we had is price going up, sweep maybe on the to the left, coming lower, mitigating a fair value gap, entry. Right, no change of character right here, but you can trade without a change of character if you want. Now right here, you see there is a displacement, and same thing. If you enter from a fair value gap, price then maybe go lower. Not here. But what I'm saying is focus on the days that you have displacement, clear displacement after taking liquidity. You know, you could see the Judas swing being created. So something like this, and then price is going up. So this is your Judas swing. You will see it very clearly. You see Judas swing and displacement. When we have the displacement, we know this is the Judas swing. Right here, you see the difference between this and this? Very small ranging, no displacement, nothing. So not really trading this day. It's not a trading day for this setup. If you go to the left, a trading day, and trading day, absolutely. Sometime like this, okay, small displacement, not much. Why? Because we have no fair value gaps. When we have no fair value gaps, there is no entry. Also, when we have no change of character, or even sometimes a change of character here, but we have a very big fair value gap, we don't trade. Sometimes it's going to work, but most of the time, even if you have a change of character to the upside, but you have a very big fair value gap right here, price might just get rejected from here. So not trading this. Now we go to the left. There's some times where you're not going to have an entry. Maybe you have the fair value gap, yes. Maybe you have the displacement and everything, but price will not come back to your fair value gap. Using the higher time frame, the 4 hour, the 1 hour, and sometimes the daily, if you are in a bearish fair value gap, you would be biased to take short positions, and the same thing for the long positions. So think about it in this way. If you want to have a higher win rate, use a higher time frame. But the setup itself is very easy. We are only using NASDAQ for this setup. Only NASDAQ, 15 minutes time frame, 9:30 EST, New York time. That's all you need.